There's a question I hear from a lot of high net worth investors, and it's one that doesn't get talked about enough. Not, how do I grow my money? They've already done that. The question is, now that I have it, how do I make it work for me without spending it down? That's the retirement income problem, and it's more common than you think. You've accumulated assets in real estate, in the market, in a business, but when your active income slows down or stops, how do you create consistent, predictable cash flow without shrinking the pile? That's exactly what I want to talk about today. Most traditional approaches to retirement income involve drawing down your principal over time. The standard model says save enough, then slowly spend it down over 20 or 30 years and hope it doesn't run out. That model creates a very specific kind of anxiety. Because if the market drops, or you live longer than expected, or you have unexpected expenses, you're drawing from a shrinking pool. Every withdrawal makes the next one a little more stressful. There's a different way to think about this. Instead of drawing down your principal, what if your principal stayed intact and generated income on its own? That's the concept behind a preferred return investment. Preferred return means you get paid first, before the investment company takes any profit. Your original investment stays in place. The return comes to you as income. You're not spending down what you built. You're living off what it earns. Here's how that works with Freedom Notes. Let's say you have $500,000 that's sitting in a savings account or in a low-yield vehicle. Investments that are technically safe, but earning almost nothing. In a low-yield savings account, that $500,000 might earn you a fraction of what it could in a higher yield environment. That's not income. That's barely keeping up with the fees. Now imagine that same $500,000 invested in Freedom Notes at 10% preferred return. That's $50,000 a year in income paid quarterly, meaning $12,500 every 3 months deposited to your account. Your $500,000 stays intact. And at the end of the 12-month term, you get it back, or you roll it over and keep on earning. That's not a hypothetical. That's the structure of Freedom Notes. Fixed rate returns, your principal staying protected, and your income predictable and consistent, not dependent on whether the market is having a good year. If you have capital that's not working hard enough for you right now, sitting in low yield accounts, riding the market roller coaster, not generating the income you need, I'd love to show you what an alternative could look like for your specific situation. In one of our next videos, we make the case for why starting now, even with a smaller amount, beats waiting until you have more. Go to chatwithfreedom.com. We'll get on a call, look at your numbers, and tell you honestly whether Freedom Notes is a fit. No pressure, just a real conversation. I hope this was helpful, and I hope we have the opportunity to work together.